Hello everyone. So in the previous video, we saw how investing in stock markets is the only way to consistently beat inflation for a long duration of time. So in this video, we will discuss about how to invest in stock market and the procedure to start your trading journey. Technically speaking, stock markets work very similar to your neighborhood kirana store or a supermarket where we shop for our daily needs such as groceries, items for personal use, snack foods, etc. Similarly, we go to the stock market to shop for stocks of different companies. From stock markets, we can buy or sell shares of different companies. For example, if I want to buy shares of TCS, I can only buy it through a stock exchange where the company is publicly listed. As a retail investor, I can't buy shares of companies from any other medium. So in short, a stock market acts as a middleman where a buyer can find a seller and vice versa. Now, unlike a supermarket, the stock market does not exist in brick and mortar form. It exists in electronic form. You can access the market electronically from your computer and go about conducting your transactions, which are buying and selling of shares. Also, important thing to note here is that one can access the stock market via a registered intermediary called a stockbroker. We will discuss more about the stockbrokers in the coming videos. There are two main stock exchanges in India that make up the stock market. They are Bombay Stock Exchange and the National Stock Exchange. Besides these two stock exchanges, there are a bunch of regional stock exchanges like Bangalore Stock Exchange, Kolkata Stock Exchange, and the Madras Stock Exchange, which have very less shares listed and have very less volumes. Hence, they are more or less not important for our discussion. Now we'll look more into the stock market participants and the need to regulate them. Anyone who transacts in the market is called a market participant. The stock markets have various players including individual people like you and me to the big corporate companies. Now we will look into what are the different types of market participants. The first is the retail investors. Retail investors are individual investors like you and me transacting in the market. NRIs and overseas citizens of India. These are the individual investors who were either born or are of Indian origin but are residing outside India in some other countries. Third is the domestic institutional investors, or more commonly known as DIIs. DIIs are the large Indian origin corporate companies based in India. Some of the examples of DII would be LIC, UTI, etc. Next is foreign institutional investors, or more commonly known as FIIs. FIIs are the biggest players in stock market. These are the foreign banks who have incorporated offices in India and invest in Indian stock markets. Examples of FIIs would be Citibank, Goldman Sachs, Merrill Lynch, along with private equity and hedge funds. Last but not the least is asset management companies. These are the formal names of all the mutual funds in India. Some of the examples of mutual funds are Axis Bank Mutual Fund, SBI Mutual Fund, HDFC AMC, etc. Now, the end goal of all the players participating in the market transactions is to make money. FIIs and DIIs, since they have very large sum of money, they regulate the entire stock market. These two generally operate in opposite direction. That is, if FIIs are buying, then DIIs would be selling. Due to this, a balance is maintained in the markets and the stock or the index does not go in either direction in irrational amounts. That's it for this video. We will learn more about stock market in the coming videos, so do keep watching for more insight on stock markets. If you like this video, do share and subscribe the channel for more stock market related knowledge.